Bank Underwriter gives advice on approvals and limits. Outline of the text. 1. Introduction. Insights from a credit card company underwriter with 10 years of experience. Understanding why applications are denied and how banks decide on credit limits. 2. FICO score and creditworthiness. FICO scores are not always reliable indicators of creditworthiness for banks. Thin credit files, few accounts and short history, versus thick files, many accounts and long history. Banks use credit reports more than FICO scores, and 80% of applications are reviewed by algorithms. 3. Authorized users and credit scores. Being an authorized user on someone else's account can impact FICO scores but doesn't equate to a solid credit history. Banks often see these as thin files, which might limit credit options. 4. Algorithmic decision-making. Most credit decisions are made by algorithms, not humans. Banks have unique internal scoring models and approaches that may not align with FICO scores. 5. Credit inquiries and approval odds. Multiple credit inquiries can negatively impact approval chances. Inquiry thresholds and timelines differ by bank. Recent activity is scrutinized more heavily. 6. Utilization and debt management. Low to moderate credit utilization is viewed more favorably than 0% utilization. Active management of credit lines shows banks your ability to handle debt. 7. Minimum income requirements. Income plays a minimal role in approval but can influence credit limits. Most large banks don't verify income during application, while some credit unions do. 8. Impact of relationships with banks. Having existing accounts or a relationship with the bank can impact approval odds, especially with thin files. Local banks and credit unions value customer relationships more than larger banks. 9. Credit cards with high limits. Premium cards like the Capital One, VentureX, Chase, and Amex offer higher starting limits. Banks often use internal assessments to set credit limits based on customer profiles. 10. Recommendations for boosting approval odds. Opening and maintaining accounts with prospective lenders can strengthen approval chances. Monitoring credit inquiries, maintaining active credit usage, and building relationships with banks are key strategies.